Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, I think that we could have a really interesting trading day today. Yesterday we had Federal Reserve, so they have to digest that, and I'm not too sure that the way that the market reacted to the Federal Reserve today is really like, I don't know if they've thought this all through. Then the other thing was Janet Yellen yesterday talking about the FDIC and saying that she doesn't anticipate them raising the limit. She has since backtracked, but that really hammered the market. And I think that these small regional banks are going to remain under pressure. So that kind of provides us backdrop to trade on. I think that some of the worst volatility is behind us. So we should be able to get like decent moves, but not like super crazy stuff. So we might be able to take some trades today. Let's come and look at the charts and see what we got overnight. I don't sound right this morning. I probably need to blow my nose. So here you can see the Treasuries. Right after the Federal Reserve meeting, we moved significantly higher. We are now maintaining those prices. You know, they're coming back maybe a little bit. Not. It's still, we're still at what, 3.47. Okay, and here you got the E-mini getting like super hammered. Okay, Oil is handling things okay though. Gold and silver pushing quite a bit higher yesterday. And Kappa always doing something interesting. It looks like they're still on the uptrend, but it's moderating and fighting it out. And then Bitcoin, oh my gosh, Bitcoin. Okay, so I'm not 100% sure which caused this move, but there was two things yesterday. Number one is that Coinbase got a Wells notice. So I don't think that's the big problem, but just keep that one in mind. They got a Wells notice. Then the other one is that they're indicting Justin's son and a bunch of influencers for securities fraud, basically. And I don't know, this is a huge mess, but that really hammered the Bitcoin market. Remember that Tron has like half of the tether out there, so that's kind of a big deal. And I continue to say that, like, it looks like the trend is up, they're pumping it, but the risk is so high. The risk of, because the government does not like Bitcoin right now, so if you are in Bitcoin, just be advised, high risk in that asset right now. Okay, and the dollar continues its move lower. We are now down below 102. Now we're at 101.7. So what's a Wells notice? A Wells notice is a notice that the SEC sends to a company when there is about to be enforcement action. So it means that the SEC is going to be taking legal action against Coinbase for something. But I don't think we fully know the full extent of that one yet. That's why it's kind of like a little an extra scary market event sort of a thing. So we're going to check a couple of things here. Oh my gosh, there's this Ninja Trader related mailing list that I'm on for I don't know why, and they've started sending out so many emails. It's kind of annoying. Oh, morning, Uzi. Okay, so let me blow my nose because I definitely don't sound right here. Yeah, I thought when the baby kept me up all night on Friday night that like that made me sick, but I'm starting to wonder if it's not just spring coming on. TikTok this morning was sending me videos about allergies. So it's figured that one out. I went this morning and got a couple of buffalo rollers and a 20-ounce Dr. Pepper, and it costs 85% of an hour's labor at the minimum wage. Oh yes, we have news. Sorry. Pay attention, Seth. We got U.S. initial jobless claims coming in at 191,000 versus an expected 197, so slightly lower than expected. And that is causing the Treasury market to sell off a tiny bit. Chicago National Activity Index negative 1.9 versus negative 1. Later today, we have new home sales. It's still a pretty light week news-wise. Well, I have a theory about the minimum wage. Here's my theory. The reason why we went through such a long period between 2008 and 2020 without significant inflation, and in fact, the Federal Reserve actually having to continually inject money in order to keep inflation at its target. Two reasons. There's two things that I would cite that I think are major factors. One was just the effects of globalization. We were really especially electronics got so cheap. And then the other side of it was because they weren't increasing the federal minimum wage. I think that the what we show is that when you increase the minimum wage, that everything just adjusts for it, and so it doesn't really help anybody, right? I think that the minimum wage is probably too low. I mean, which is to say, not to say that we should or shouldn't have a minimum wage, but so this is, you kind of have to get into this philosophical debate here about this. So the thing is what is the point of the minimum wage? Because I would totally be on board with the minimum wage is there to ensure that companies cannot exploit the lowest rungs of society and cannot exploit teenagers and stuff, right? Because those are the people that are most likely to be working minimum wage jobs, I would say. Or at least and in the conservatives' view of the world, ideally they're mostly teenagers. Okay. And that is not what FDR believed, though. FDR believed that it was to make sure that everybody had a livable wage. Okay, so if you wanted to go by FDR standard, it'd have to be way, way, way higher, right? I don't think that you'd ever be able to get to that point. I don't think that you'd ever... I don't think that minimum wage work is sufficient to live. We would have to be able to build things much more efficiently in order to get to that point. Yeah, for it to be a minimum wage, it would probably need to be at least 23 an hour, you think? I don't know. Here's the thing. I mean, I don't understand why people don't see this, because it just seems so obvious to me. The places that have the highest cost of living are the places that continually raise the minimum wage. Why don't I have that problem here in Utah? I think it's because of the minimum wage. Well, what do I know? It was funny when I lived in New York for a while, for a month or whatever it was. I always ate at Subway because the cost of a sandwich at Subway is the same in New York as it is in Salt Lake. Like everything else in New York was like if I wanted to go and get a steak, it was like $30 or something. It was like insane. Okay, and over here at the time it was like $7. You know, but everything was so expensive. But if you just ate at like Chipotle and Subway, was just cheap. And then I reinvested that money into my DJ equipment, and was a valuable investment. That's kept me going ever since. We have it now in Florida because we voted to make it 15 by 2026. Yeah. So to that point, because the federal minimum wage hasn't changed for like 10 years, it is absolutely out of whack. It's absolutely out of whack. And in fact, so normally when you raise the minimum wage, the studies show, and this is a very nuanced thing, of course, there's a lot of nuance to it, but generally speaking, cost of living increases, right? Well, my hypothesis is that when we increase the federal minimum wage, that it won't really have that much of an effect, because the minimum wage is so low now that like hardly anybody is actually making that much. I do sometimes wonder, like, are there jobs and things like that that are removed from the economy because of the minimum wage? You know, fun things that, yeah, and I really mean like fun. Like there could be situations where you could be like an intern of sorts and get paid like hardly anything, but you're like a little kid and you're hardly actually doing any work. You're just there to learn, right? I think there could be a lot of jobs like that out there that don't exist because of the minimum wage. But then at the same time, I'm kind of like, well, it's kind of turning into anything that I would want to unleash an intern on, I should be able to send to a robot, right? Yeah, or at this point we could make the Fed minimum wage 15 and it wouldn't matter at all. Yeah. At the very least 10. At the very least 10. Like I can't imagine you going to work for somewhere and not making 10. Okay, so while the open in the Treasuries was to the upside, we are seeing some downside action here. I would say pretty decent. Well, okay, so it's not really coming through on the 10-year, but in the 30-year, they are selling the 30-year pretty hard there. And we're back to 3.5. Okay, they appear to be forming a node. There's a big old fatty order there in the 5-year. There it goes. That was a good take. I don't know. I feel like I'm a little bit late on this trend, but it sure seems to be coming down pretty aggressively, right? Basically, the suburbs of Central Florida is where Uzi lives. I really don't like my position, but I sure do like the trend and the setup and everything. Because you got plenty of room to recover the stuff lost from Janet Yellen yesterday. And so here's my take. I didn't get into this in the morning thing, but now that we're all here and everything, I should get into this. So yesterday there was a Federal Reserve meeting, and then after or during the Federal Reserve meeting, Janet Yellen was also speaking, and she said that she doesn't expect any change to the deposit insurance. So she's saying they're not going to change the FDIC insured limit. To do that, you would have to work with Congress, right? So the market flipped out, and then later she backtracked and she said she looks forward to working with Congress on this. Okay, which really means it's not going to happen. Okay, but here's the thing: do we actually need it? I would argue that we don't actually need it. It shouldn't. The BTFP program should be enough to fund these banks at least for the next year. Oh man, now this is where it gets interesting, right? It's like, okay, so right now these banks, they need this money so they can get the value of their bonds back at par value, and then they can go and turn around and put that into something else, right? Okay, but let's just say we have the interest rate hike that we just did, and they do another hike in May, and then they really do what the Federal Reserve says, which is that for the rest of the year, they just hold interest rates the same. Okay, let's say that actually happens. Okay, then at the end of a year, when these when the BTFP program, kind of like their loan term or whatever ends, then what do you do? We're quite a ways away from 4% in the twos, but I think you're right. I think that's probably the target here on this move. I mean, there's still quite a ways to go here this morning before we even get to overnight lows. That would be 02, so another 2 ticks down in the 10-year to get to that. They sure are selling the 30-year hard though. So like here's what makes this move interesting is that yesterday they net bought the treasuries yesterday, right? But it steepened. And now today they're retracing that move, but they're still steepening. That's interesting. Okay, so we did get 10 ticks on that. I'm gonna rate that entry an A because I hit it, and shortly thereafter they moved and I could have scratched it, and I think that was a good one. Most of the MBO bids is that in the interest rates? Yeah, there's quite a few big targets down below us, I see. Well, there's that 1500 is going to be, oh wow, okay, this one right here at 1425, this was our target yesterday. Do you remember that when we were having that sell-off in the treasuries during the press conference, and I was like, oh, this big order stacked up here at 114.25. Well, back then there was 1400 lots on it. Now today there's 3400 lots on it. And it is just a big old fatty order, apparently. Well, it looks like the market was going to want to... We have indeed created like a strained location. So we're going to have to kind of hold out through a little bit of drama, I think. If this is really going to play out the way we want. So anyways... The point of all of that was the regional banks are in a pickle. Like what's going to happen to help out the regional banks? Why, if you are a small business and you have more than $250,000, why would you put it in a regional bank? Why would you put it in a regional? I don't see any reason to do it. So I think that the BTFP program hopefully should be enough to like stabilize the market and everything else. But the whole thing is what happens in the next year while that BTFP program is going on that helps the regional banks recover and helps the regional banks to be profitable, so that we're not just in the same situation a year from now. And I don't see it. So that's why, even though I think that we probably are going to recover from Yellen's comments, we're still in a tough spot. This is going to be an ongoing problem. It's going to turn, I think that we're going to turn back into a much more healthy market with more liquidity, but it's still like a slow moving crisis. You know what I mean? That's interesting. Is it interesting that we have that big order down there and now it's gotten bigger? It is interesting. I think we're going to hit it. I think it might take a lot of time. I think that just because I said that, they're going to dink around with it and not touch it until after the stream. But I think we're going to touch it today. Let's see. Always lovely. Yeah, I always gotta be careful when you're looking at like those big orders as like targets, because I definitely feel like when we get a strong trend that you get that there will be like an area of large liquidity and they just like sprint to it, go around it a little bit, and then maybe they continue a next leg when another target shows up, right? But anytime that you see, but I can't tell you how many times I've seen a situation like this where it's like, oh, there's this big order down here and I think that they're going to go down to it and they don't. You know, so I wouldn't call it a reliable indicator or anything like that, but it certainly is worthy of note. Let's put it that way. Wow, tornado damages buildings near Los Angeles? Okay. Man, California is just getting all the crazy weather this year, ain't they? Aren't they? Apex. So, you know, something that's really bothering me lately is there seems to have been, I don't know, if I want to change, you guys weren't saying anything, I'm going to change the subject to something more interesting to you, okay? There seems to have been a resurgence in the popularity of funded trader programs, at least on Reddit. Seems to me like everybody's talking about which is the best funded trader program, which I don't get. I'm seeing a bunch of people like advocate doing this. So one of the things that I'm seeing is these guys, they will go and they will create like literally 20 different accounts. They will create like literally 20 different accounts and then go through them. And a bunch of them they blow, but then a couple of them they get funded and it's like trying to multiply your winnings sort of a thing. I think it's funny because I think it kind of proves why the funded trader programs are so bad. Because if you go through that and you do that 20 times and like half of them blow up, right? Isn't that kind of like proof positive that you're likely to blow up? Like if half of your accounts blow up in that 1 month when you're doing it, then what's going to happen the next month on the ones that you got funded, right? One time and you should pass. Yeah, I've heard that those firms count on the subscriptions from the failing traders, doesn't it? I think it does. I think it does. I mean, so like here's the thing that I think is kind of sad about it. Because I talk to these guys a lot. I don't think I've ever spoken with Top Step, but pretty much every other beginning funded trader program that has come along has emailed me, spoken with me in some form or another. It hasn't always resulted in a video. I'm willing to do sponsored videos because it is still a legitimate service, right? I don't think that it's for everybody, but it is still a legitimate service. I don't want to actively promote people, but here's why. Is these guys, when I speak to them, they're real about it. Okay, they are not getting into it to just make money off of the losing traders. That's not their intention. Not any of the people that I've spoken to, and I really do believe that they genuinely believe this, that they are in it for the right reasons. But the problem is that the incentives of the program are completely off. Right? They do better if you fail. Frankly, they do better if you fail, and they all end up using the same model. They all have the same rules that they took from Top Step Trader, and they just kind of changed them around the edges. You notice that there hasn't been a prop firm that has like a completely different structure, right? Like, what if the structure was you trade for 3 months, and if you meet a certain consistency benchmark, then we fund you, right? Why isn't that the model? Well, because you don't make as much money that way. The good ones are two separate firms. One is the evaluation firms, which profits from the evals, and the other is the prop firm who gets the ones who pass. Well, okay. I still don't see how it's really structured to align incentives properly, and that's why I don't do the affiliate programs for it anymore. Because I realized that my incentive with the affiliate program was to get as many people to do the combine as possible, when I don't believe that it's appropriate for most people. You know? And again, like the fact that these people, they'll go and they'll do like 20 of them, and then maybe like a few of them fail. It's like a few of them are going to fail every month. If that's the way that it's going, then that means that your strategy is essentially destined to fail at some point, right? At some point, it's destined to hit the trailing drawdown and lose the account. And they promote it as though like they're doing really well and all of these things, but in fact, it's proof of the exact opposite of what they think. Yeah, so a prop firm can kind of, yeah. Gary Norton made a video about that yesterday, right? But I think he was talking about SMB. I think he was talking about SMB and those guys that basically they are not about training traders to be really good prop traders and stuff anymore. They're just doing fee arbitrage. Like they get the seat and then they make basically the commissions that your introducing broker would normally make. And then the trader still gets a pretty good deal because they still get a fairly cheap commission and a place to sit, I guess. Have you heard about Trade Day? I don't think I'm familiar with that one. Yeah, Trade Copier, you pay reset, you pay real account, you pay so if you still, yeah. The whole thing is just crazy that people are doing this, in my opinion. Okay, so we just got the backwash there in the Treasury. I wouldn't say that it's super strong volume to the upside, but in the 10-year, I'd say it's about on par with some of the downside action that we did see. So, $6.45. So they got themselves positioned to, if they were going to do another move, maybe it would be out around the mini open. Still, it just super bothers me, all of the people that are pushing it. So if you keep making money after that, you won't eventually hit it. Okay. I can't tell you how many people I've come across. So like there was a couple of people that I think I was following them on Facebook, or I don't know exactly where it was, but you know, people that I kind of knew from when I was still doing it as a combine, when I was still doing this stream as a combine. And a lot of those people are still out there doing stuff and like generating a following, and they get funded and then lose the account over and over again. I mean, like, that's happened with Matt, right? But I see it happen with a lot of people. They get funded and then they blow the account and they start over again. And like, here's the whole thing is so the thing that there's some people on Reddit doing, and I really think this is a degenerate thing, is again, they'll use like a trade copier and they'll open up like 20 accounts or something, and then try and trade all of them, and they'll start a new one each day, right? Why wouldn't you just trade your own money? Like, if they're saying this is to prove that this method works really, really well, and the way that I'm going to prove that this method works really well is by passing the combine X times. But it's like, if it's so effective, why aren't you using your own money? Well, I tell you why. Because eventually it blows up. That's got a sec to be a company that gives like 300K to some guy and he immediately... Well, the way that they have it all structured, the risk that the actual prop company takes on is very minimal. It's quite a minimal risk that the prop company takes on. Because it's faster to max out your credit card with 20 accounts. Yeah, I mean, think about it. Okay, it's 150 for a 50K combine, right? So if they were doing 10, that would be $1,000, 1,500. Okay, and if you're doing 20 of them, that's 3,000. Okay, if you had $3,000, why wouldn't you just trade your own account? Like, you would have the same trailing drawdown basically, but you'd have no rules. You'd be able to do whatever you want. You'd even be able to hold E-mini. No, actually, I don't think that matches it for E-mini, but you could even hold E-micros overnight, you know? So why not just trade your own account? The whole thing is dumb. And people fall for it, though. Like, people think it's... People are, like, excited by it. See, it bothers me. It doesn't bother me because, like, oh, people, like, another method of doing things is more popular or something like that. It bothers me because I know that other people are going to lose money from doing it. People that could have been otherwise successful, maybe, but they won't be because they got attracted to the wrong thing at first. That little move there higher is not... I am seeing some volume come in short a little bit, though. You know, this move down was accompanied by a pretty good move in both the Japanese yen and the dollar. Why does it bother you that people lose money? Because I want traders to be successful. I think that in many respects, we're kind of... but I think that in many respects we can work together, and that having multiple people working together can really help you, can really be a strong edge. And so every time that you get somebody that goes into a trading strategy that is bad and they blow all of their money, that's somebody that we could have had on our team, that we could have had, you know, contributing and doing well and going somewhere with it, but instead they like immediately burn out. That's what frustrates me about it. Because in order for us to be competitive, we need more retail traders to be successful with this. This should be our goal, is to have more retail traders be successful. It doesn't bother me, the game itself. What bothers me is that one set of players has such a huge advantage, right? This is not good for the market overall. If we want the market to be more efficient, if we want markets to be less risky, more accurate, better priced, less prone to volatility, all of these sorts of goals, right? Then we kind of need to eat away some of the advantage that some of these large players have, right? Because the way that it works right now is basically the market maker has almost every advantage, and the guys that are at the banks and the hedge funds and whatever basically rule, right? It's very different from what it was like in the 80s when you had the pit. When you had the pit and you had the floor, you knew who you were trading against. If somebody tried to pull a quick one on you, then you just decided not to trade with them anymore. So people had to be a little bit more honest with what they were doing and not do any sketchy stuff, right? And the people on the floor, the locals that really knew their instrument, had a really big advantage. And so it was kind of the professional traders that were the ones that were always like moping and complaining about how the locals are ripping them off, right? And now it's the complete opposite. And I'm saying if you want a more balanced market where the power is more balanced, you need the retail traders to be better, essentially. Yeah, there is some size in ZN at the defending the open. Now, I didn't see a click when they like put that on there, but I am a little bit. I mean, I kind of hate it whenever these sorts of things show up. So let's see. It's an advantage of every competitive. There's always a few winners and the rest are average and losers. Well, no, because the people that are winners aren't the winners because they won and then they push their advantage or something like that. They're winners because they basically rigged the market in their favor, right? They saw this thing and they said, "Oh, I have a big advantage when you can't see my face." So they they pushed the market in the direction that was better for them. It's a structural problem. It's more, how would you say it's more democratized? It's not democratized. I'm telling you, it's like 5 guys are determine where it goes for the most part. Because if those 5 guys decided that it was a short today, they'll just absorb and absorb and absorb at the top. Okay, well they took the big order at 07.5. Let's see if they've got more steam after that. 08.5 is a key positioning for the market makers. Oh man, oh geez. Oh, that hurt. That hurt, guys. Because the 30-year shot up there on that one. Yeah, there was a decent change. I mean, it's only like 1,000, 2,000 contracts, but on the cumulative delta, that ends up being pretty significant for the 10-year. It's not, well, okay. Listen. I don't think that that's a very effective argument. An effective argument is, here's what's happening and here's why and here's proof that this is what's happening, right? Okay. The market makers, we know that it's a very small number of, it's a very small handful of market makers, especially here in the futures, that are responsible for the majority of the market making activity. So that's the first thing. We know that that's the case. And then the second thing that we know is that which orders are pulling tends to be more indicative of where price moves when you look at the level 2 changes and what predicts a move. So it's when the market makers are adjusting their bids and offers according to some sort of related asset, for instance, that kind of determines where things going. So a lot of the time you'll come up to a point and you'll start to see like lots of absorption, and it's like, why all of a sudden here? Well, it's because the market makers, based on their correlation usually have decided that this is a good place for them to add inventory, essentially. So it's not just like it's to try and say this is like some figment of your imagination or something. It's just objectively false. That is the way that it goes. And it is also, I would say, an objective fact that locals had a better advantage when they were on the floor than what we would call a local today has. I think that what a local that we have today, that pretty much everything is pitted against them. Every little thing about the market is really kind of to your detriment, right? The structure of this market, it is a fact that the structure of this market favors the block traders and not the small locals and speculators. So in order for those small locals and speculators to make money, they have to have a really huge edge. I can't get over the fact that one of the market makers in Treasuries is just a guy named James Grohl. Have you ever tried looking him up? I haven't. I've never tried looking him up. Lucas, I've spoken to them, and the reason that I feel that way is because of what they told me. Right? They know when they come in and they start doing their orders, the market is going to move. And they also know that like the market has no way of seeing that it's them or knowing what's really going on, and they only realize what's going on after the fact. Right? 100%. They can play any game that they want. And they know it. Oh, he was fined years back for spoofing. That's funny. Let me tell you something. This is because here's where I think this comes from. Okay. There is this is a part of the Stoic approach. Okay. The Stoic approach is that I am responsible in one way or another for everything that happens to me. That's the Stoic approach, essentially. And the advantage of the Stoic approach is that it forces you to take responsibility for your actions and to try and improve your life. And so generally speaking, you know, people that are like motivational speakers and, you know, you want to have success in your life type of people tend to teach you the Stoic approach, right? But the problem with the Stoic approach is that when something really is tilted against you and you are just acting in denial of reality, okay, you can be as stoic as you want. It doesn't change the reality of it, right? And so it can absolutely happen that, yeah, you can get into a relationship with a narcissist and there would be no way for you to really be able to avoid it, right? Because they're really good. People are really good at deceiving us. We're not as good at telling when people are lying to us. Okay, so sometimes those sorts of things are happening. And when you try and take personal responsibility for those things, when it really wasn't your fault, that's really damaging to your psyche, and it doesn't actually help you, right? So if you come in here into the market and you're trying to say, oh well, it's all on you, I think that you're kind of acting in denial of reality, and I think that you're kind of putting yourself at a disadvantage because you're ignoring the things that are working against you. Because the whole thing is that what you got these things that are working against you, how are you going to overcome those? You have to compensate for those things somehow, right? But it is true, Lucas. They have a structural advantage over you. Like that's straight up one of the whole points of me teaching you all of this is they have a structural advantage over you. So you have to adjust your trading to account for that. And even after adjusting all of your trading, basically what it means is if you're a trader, okay, You take a clone. You at 16 years old, you clone yourself. Okay, one clone goes to school, gets a job with Goldman Sachs, and is a block trader. Okay, the other you just browses the internet, reads everything that they can, maybe even watches this channel, right, and learns everything that they can and tries to be successful as a retail trader. Okay. 9 times out of 10, that guy that was a professional is going to make tons of money, and the guy that was the retail trader is going to hardly make anything. Why? Because this guy has a structural advantage. So this guy has to understand and acknowledge that structural disadvantage that he's had in order to craft his strategy in order to still be successful even while everything is tilted against them. Because even though everything's tilted against you doesn't mean that you can't be successful, but it does mean that you're going to have to change the way that you do things, right? And it is just an objective fact that retail traders are at a structural disadvantage in this market. And it's even worse when you're doing stocks. They have to put more risk, but their ability to put more risk is just another further advantage to them. And yeah, plus they have a margin and commission advantage. Yeah. And they have a resource advantage. They have an information advantage. They have a, come on, man. The one place where a retail trader has an advantage over like those big traders is that the retail trader doesn't really have to worry so much about their market impact. That's true. Or I mean, I like in a big move, like it's when there's a big move and there's like informed trading going on, and the retail trader can much more easily take advantage of that. I don't mean that to say a retail trader should never concern themselves with market impact and what their impact is. There are some times where it matters, but God, this is pissing me off, man. I held it, but this is just not going well. And I am a little, well, I guess I did hold it quite a bit. I'm just trying to figure out why is it negative 30 for me instead when I was only able to get 10 on the other side. But I think I might be able to hold on a little bit longer. Oh yeah, and stuff. What happened to Navinder is absolutely a total great example, right? True legend. He was just doing like pure market making, and then the robots came in and you know, took all of his profits, took all of his business. And so then he started to try doing some of the same tricks that they were doing, which are illegal, and he knew that they were illegal and everything. But and then he took the fall for it. When in the end, all he was trying to do was trying to level the playing field for himself again. Yeah. So what's the point? Well, so how do you overcome that disadvantage? I say that one of the ways as a retail trader that you can that can help you overcome that disadvantage is working together with other retail traders, combining your resources, because they have a man advantage on you. Well, you realize that they're like a whole team of people with thousands of people in support helping them, right? You're just one person. You can work with other people. Okay, so I'm trying to think about what I need to do here in this situation. Do I need to just puke? I mean, it kind of looks like it is. But on the other hand, I'm also thinking about it and I'm like, well, it's like minus 30 is usually a pretty big loser for me. And I don't feel like this should be a big loser. But I mean, it did move that far. And I guess what I need to realize is that the volatility is still relatively high. So it's just really frustrating. They only got 10 favorable ticks. You know what I think is going on here too is we are getting still steepening. So it was like they sold the 30-year and then they bought the 5-year up. So that might be why I maybe misread it as a trend retracing Yellen, and instead it was actually just part of a spread trade. I think that's what it was. The market always goes the way that we think it will until we participate. It sure does feel like that, right? Tell me it isn't easier to compete against the other retail traders and leave the black traders alone. So here's the problem with that. Look, because I understand why you say that. But when you're trading against the retail traders, but you're competing with the robots for those, it's really hard to do. It really is. There are some markets where it's just not practical. In fact, I would say most markets is just not practical. I do just have all of the answers, frankly, Lucas. on the things that we're talking about here, like I don't just come up with shit, right? I quite frankly, I think at this point there's a lot of things that I know that you don't. All right, well that's my limit. It's to they just keep going. Fuck. So now this is the point where I start thinking, is it a meta order the other way? Should I flip around? But I don't know why it would be going up other than maybe like general risk off aversion. I'd say that was a pretty strong move up in the treasuries. I'm not seeing a corresponding move in the equities. Maybe a little bit of correlation with the dollar. So I think that kind of puts me into I don't want to trade mode. I think you're just mad that I have better arguments than you and you don't know how to push back against them. Actually, I go a little bit further, because here's the real problem as I see it. Okay, I think that what we do as people is we form an identity, and we want to hold to this identity. So when we see information that is counter to that identity that we want to have, it's upsetting. Right? So the problem is as a retail trader is that we are given some idea of what trading is, either, you know, from the news when we were kids or from some guy on YouTube that we're seeing doing it. And we fall in love with this idea of what trading is, right? And then we want to go and duplicate it because we want that identity. We want to take on that identity. So one of the identities that you come in and you want to take on is that of the person that's like furiously clicking all over the place all the time and is market making and taking dozens of little trades all of the time, and you're in the fast market and that's cool and you're fast and that sort of a thing, right? But the question is, does that identity that you have, is that really in line best with the resources that you actually have available to you, right? So the big disadvantage that we as a retail trader have in a market making type strategy is that you are basically always at the back of the queue, right? And if you get filled, it's because there's market orders was willing to go against you, right? that is a huge disadvantage to a strategy like that, right? And the people that are teaching this sort of a thing, they know that, right? And they warn you about it, right? Like Gary Norton, he has always said, like, well, I only do this in a specific market, and he's always kind of doesn't want to tell you which one, right? Because he doesn't want other people to be competing with him for those spots in the queue. Right? Like, yeah, just like doing it in the 10-year treasury, it's not practical because you're not getting in the queue in the right spot, right? So when you look at the structure of the market and the resources that you have, you're going to have to craft a strategy that is best in line with that, right? And the contention that I'm making is that for most retail traders, it is according to the resources that you have available, you're much better off trying to be an informed trader. Okay, because the noise trader strategies don't really work, and the market making strategies, you're probably not fast enough for it, unless you can find a market that is really inefficient and really provides you these spots, right? It would be nice. So there are some things about a market making strategy, if you can pull it off, that are really advantageous, especially from like a risk management perspective and like a learning perspective, being able to take lots of trades a day so you can learn quickly. And, you know, if you take equal risk reward and everything, you can get good, decent feedback on your trading. And like, there's some real advantages to it like that, right? But I think that the structure of the market right now favors the people that are trying to do it as an informed trader more. And I don't just make these things up. Like, there are real reasons in research, and, you know, of course I'm making conclusions based on that research that aren't necessarily proven, and I don't know if there would be a way to prove it, but I don't just pull this shit out of my ass, right? Maybe I pulled that short trade out because I feel like I got suckered into a downtrend and then they just rode it against me the whole way. I did not like that. I'm really upset about that trade, man. The thing that will get me miffed about it is that, like, it was just like a teeny tiny little push higher, and then all of a sudden it's from negative 20 and negative 30. It's like, what? And then it was so hard to get plus 10. What? That's nuts. Okay, can I ask a question about the market depth tape? When you have the negative sign in order, does that mean the trade was pulled? Yes, that's what it means. It means that many orders were pulled from the price, right? So if it's an offer and it's a negative number, then that means that 1,000 was pulled from the offer. Okay, so especially if you got a big one, I don't think that I do have a big one today to show you, but when you get a big one pulled, that could be like a sign of a spoof, right? That's when you see, okay, they had this big order there and then they pulled it and the market flipped up through it, and maybe he was spoofing. Those, when I see a really big order like that pull and it trades through it, those are the ones that I report to the CFTC. But even in a normal market, if we're not in a normal market, but if in a normal market, you know, seeing 1,000 pull at any one price is pretty typical. Okay, so there was an iceberg at 12. Man, so if you had gone opposite here. So let's look around and see if we find any information that perhaps suggests why this played out the way that we did. Okay. FDIC unexpectedly delays bid deadline for Silicon Valley private bank. No, that's a more recent headline though. Swiss defend 17 billion AT1 bond wipe out in Credit Suisse deal as furious creditors, including David Tepper, vow to sue Switzerland. That's much afterward too. Block shares fall as Hindenburg accuses company of fraud facilitation. I don't see it. I don't see it, but we were not the informed trader in that situation, so I don't know if I think I would have very much preferred to have only lost $20 on that trade, but I guess with the kind of market they were trading here, that's going to happen to you. Man, there was so you look at the Treasury here. So here was the down move that we kind of caught a little bit of. So we got into it about right here. We made $10, right? And then here's 10, 20, 30, something like that. Okay. So there was some selling that preceded this downturn, but it was mostly in the 30-year. It wasn't really in the 10-year. Okay. So then once you get all the way to here, so above 115, what is it? 12 and a half? Yeah, right here, where there was a lot of volume, 115, 120, 115.12. Then there's like this huge increase in cumulative delta. Okay, now part of it I think is because there was a block order there, right? So 82 to 72, it's 10K change, and 8,500 of it was just one block order. Now one might think, okay, so was that trapped traders, all of the people that shorted from here getting trapped and squeezed out? Maybe. I don't know how you would be able to know or tell, because, you know, like if there was like 10,000 that had sold down here and then the 10,000 that puked up here, then that would be one thing. But since I can't match the volume up, I can't really say. I find it curious the degree of the move up in the situation that it was and everything. It was I think I haven't been that taken back, like that surprised by a move in a long time. I've been way off. Maybe, you know, even like when I go on to like some of my trading over here, like on Sim, I've had a couple of those that worked out, but I don't know if I've really been in line with the trend very well. So I think I need to come back to, I'm not sure I understand this market that well still. The issue that I have is like, okay, so if that was informed trading, and I don't know if I have enough evidence to say that that was informed trading, but if it was informed trading, what was it? Because why would you have this strong bid in the treasuries off of informed trading, but the S&P 500 just be sitting there, right? That doesn't make much sense.
UK short-end bonds extend gains. 2-year yield drops 16 basis points to 3.34%.
We could chalk it down to a currency move, though. That would be reasonable. The other thing is that they literally moved half a handle on only 10,000 contracts. I feel like I need to do something about it, but I think that the correct thing to do in this instance is to just stop for the day. I guess it makes me feel not so good just because we've only been here for an hour, you know. And I don't like to, you know, I feel like that's leaving a lot of opportunity on the table. It could flip back down. I don't know, man. So like, look here, the S&P 500 is gonna fight at 4,000 on the open here, I guess. That could be interesting if that fails.
So just seeing the S&P 500 up around spots 6.5% at the open here.
I'm just gonna keep an eye on it here. I'm just gonna keep an eye on it.
Just noting First Republic Bank shares up around 6.2% after falling 90% in the last 2 weeks.
Apparently First Republic shares are up on the open. And I think I need to come in here like a laser. Okay, so they did come through 12. Nah, I'm not sure that makes sense, man. The only thing special about 12 is that there was a lot of volume traded there, and that was where block trade was, right? So we come up, there's block trade, there's a little bit of a further British, and then it comes back to that spot. So there you got the liquidity hole at 12 probably, right? At the moment, the price movement is kind of suggesting like, oh, we're just gonna retrace that whole thing. I kind of know better. The large order at 12 kind of suggests that we're gonna stick here for a while. Oh, there you go. There's an easy win for President Biden. Too often, companies make it difficult to unsubscribe from a service, wasting Americans' time and money on things they may not want or need. I support the FTC's proposal requiring companies to fix this. It shouldn't be harder to cancel a service than it was to subscribe to it. I agree. I guess the thing that I find interesting about this move was how the cumulative delta is like just flat through the session and then 10K up there on that move in the 10-year. That's a little odd.
Russia's Novak does say that talks on the Power of Siberia 2 are at the final stage.
Hmm. 923 at 10.5. So you've kind of come back to below the scene of the trine. bid side absorption. E-mini did get above 4,000, but they're just kind of chilling there. Seems like there's a decent amount of volume trading around it. If the S&P 500 like turned risk on, that I think it would be hard for the treasuries to stay up here, but we'll see. I kind of feel like I'm so focused on it that I'm likely to end up wanting to take a trade again, no matter what. That's what that'll tend to do to you. I still want it to go down.
Russia's Novak says Russia aims to narrow discount on its oil exports. So just to repeat there, Russia's Novak says Russia aims to narrow discount on its oil exports.
E-mini came down there to bottom and I saw a large bid get added. Okay, maybe it's a little lower. Nah, I don't think that was a good spot. Is that it looks like there's an order at 10.5 now trying to fight to hold that. Jesus. It's like as soon as I try and do something again. It does it against the volume too. I'm trying to think, like, maybe there is a meta order buy coming through here, but if there is, it has to be really passive. Excuse me. But like they're at 11.5, there was a decent amount of volume, right? So there they take it offer, not a strong bid behind it though, and then it goes back up and like 400. Yeah. I am seeing some evidence there and on the inside tape that there's a meta order buy. Even though the volume in the 10-year is, the market volume in the 10-year is net sell.
Bank of England's Bailey says we have raised interest rates a lot already. We believe inflation will fall quite rapidly before the summer.
I don't know.
Bank of England's
It kind of looks like they want to go higher, man.
That means we need to see fall in inflation for it to happen. Bank of England's Bailey says we will go on making decisions needed for sustained low inflation. Bank of England's Bailey says we have been able to fix problems.
Bank of England's Bailey is speaking at the moment. I'm not sure what I think about that. I feel like that the market is getting kind of wishy-washy here now. They started moving up. I bailed. This has come right back down very quickly. Now that they've broken the bottom of that range, watch it pause. I'd say it was a good turn back down there, but again, volume is still wishy-washy. Mm-hmm. I do feel like it is too much. Yeah, Octavia is too much back and forth. I mean, it now all of a sudden it's like strong downtrend is coming in, but it's with the way that this has been going, it kind of makes it difficult for me to really to commit too much, you know? What's this? Okay, now we're starting to see, like, I don't know how to describe this. I shouldn't say volatility. There's some fight in the tape now here. The Discord is in the video description. In every video.
US stocks extend gains, S&P 500 up 1%.
That 09 half has sure gone back and forth a lot now here. It looks like they take 09 offer for a brief moment. It didn't take very many contracts though. This is like turning into a really slippery market. I mean, I guess you'd have to say it was a little bit slippery for us to have come back up here as quickly as we did, but now it's like really ticking around easily. S&P 500 so far is doing uptrend and is looking pretty good. Kind of hard for me to discern what the volume is doing here in this location because it's moving around so much. That could be indicative of a liquidity hole, I guess. I also wonder though, there may be some flattening coming in. By the way, I'm not seeing or hearing any headlines come through about all this either. The market appears to be just moving on its own. We do have home sales at the top of the hour, right? Is that the next? Yeah. New home sales. I'm just thinking about like my first trade, and I'm kind of realizing, well, maybe one of the things that was working against me was the spread, because it was basically
At 10
short.
a.m. Eastern time, we get the US new home sales.
It basically was short the 10-year.
0.65 million on the price 0.67 million, with a range of 0.7 million to 0.605 million. And US new home sales change month over month, forecast minus 3.1%.
And they seem to react to that last downtick, coming back down to the low of that range, but well, somebody decided to take him at 09. 800 contracts a night, 1,000 now there. No, comes back up too easily, guys. It's slippery. I'm wondering if it's just going to continue to kind of be like this until the new home sells. The market maker's in control? Maybe. I'll definitely see things that make me think, oh, informed trading, but then I look at all of my other things and I'm like, no, I can't say that, right? And it just kind of continues to be sideways. I kind of hesitate to say market maker is in control completely, because I don't know if anybody's in control of this thing, you know? But it is favorable to the market maker probably, right? I mean, that amount of movement is going to be favorable to a market maker. You get plenty of fills on your contracts both sides. The thing is I think there's something going on here between 09 and 10.5, but I don't think we can actually sort out what it is. I mean, I have seen some absorption at points on the bids. I don't think I've seen any kind of absorption like that on the offers. You know, when I think about, okay, so I'm feeling lots of different emotions today. But you know what I really think that move that the market had yesterday on Janet Yellen's comments that they weren't going to change the FDIC insurance was not as big of a deal as the market made it out to be. I think that the main backstop that we have right now is the BTFP program. And there are programs, I mean, there are problems with that, but that's no real change from it from before. And I think the idea, I mean, without some active crisis out there to be worried about, I don't see what the bid in the treasuries are. And I think that we should retrace that move that we got from Yellen yesterday. That's what I think. That's what I think. And I think I'm frustrated that we're up because we're up. I don't feel like that there's very much volume on it. I don't feel like that it's justified. And I feel like that we should be moving down and retracing that Yellen comments because that move was bullshit. That's what I think.
10 a.m. Eastern
That's
time.
that's why I'm having problems.
Units forecast 0.65
Because I have a theory that I think should be leading to flows to the downside, and so far it's not following through. That's really what this is about.
Sales change month over month. Forecast minus 3.1% on the prior.
It is so effing slippery.
We're also expecting pre-recorded comments from Bank of England's Baileys.
Of course, I go on that rant, and then they're like, okay, let's bid it up then. If South really believes in the downside, let's bid it up. The problem is that there could be an active crisis going on out there. There could be a bank that's in trouble, or there's something really bad going on and we just don't know about it. I don't know if I think that if that was actually the case, you would actually see a little bit stronger of a bid than what we've been seeing. So
Russia's Novak says Moscow hopes to close the contracts on the power of Siberia 2 gas supplies to China.
And this movement, the movement that we're seeing here right now, feels mostly slippery to me. Yeah, market maker in control. You know what? Another thing, new home sales changed month over month, expected negative 3.1. I think it's going to be closer to 0. Based on the number that we got like 2 days ago or whatever, right? You seeing selling in KRE? I don't know. I see what you're talking about. I don't know if that's enough to be significant to us yet. Certainly doesn't help that they're basically down where they were yesterday. Like, they haven't recovered from yesterday at all. Got a minute and a half until the housing numbers. Not typically one that we see a ton of like pulling for or anything, but it's the best we got today, right?
One minute remaining. I'll lead with the US new home sales units.
Just saying hello. Well, thank you for watching. I appreciate it. I do think I recall your name and seen you before, so I always love it when. Okay, here we go. 30 seconds.
10 seconds.
Okay, there is the liquidity pull. More on the bids, though.
0.64 million lower than.
Oh, there you go.
0.6.
Not all, so I said it was be closer to zero. It was positive 1.1.
Than the forecast of minus 3.1%.
New home sales units 0.64 million versus an expected 0.6495.
4.25%.
But the sales change was positive.
And I do.
That seems like that should be something short treasuries, but the treasury market doesn't seem to be reacting to it very much, does it?
That the UK won't enter a recession. There are signs of inflation pressures calming down. We see signs of inflation peaking, but it's far too high.
This is turning into one of those trades where, like, I feel like that it eventually is going to do something. I feel that eventually they will break down to the downside, but it's like it might not happen until long after we're gone, you know? Like, you know, the Europeans are fighting it or something, and when London closes, then the move can happen. That I find has been happening to us a lot lately. It's like some of the better moves happen after the stream, which is frustrating, but S&P 500 is still moving up. Like, look at that. And they're absorbing a lot on the bid there. So here's kind of the bottom of this inner range we've made in the Treasury.
We have posted the US new home sales February.
It looks like the E-mini has chilled out a little bit.
For all those interested.
Yeah, it'll go down, tick down, but I have yet to see a downtick where there was like a strong offer placed with it. Like, I want to see downtick immediately, 700 contracts trade into it. Some contracts hit back, they just stack, you know, that sort of a thing. Meanwhile, when they hit on the bid, they go 4 ticks at a time. What? Well, the last thing that we heard from Bank of England's Bailey was we don't know if 4.25 will be a peak in rates. So I guess one thing that I've kind of didn't note or didn't realize is, you know, like we had that strong uptrend that ended at just before the S&P 500 open. So I think that most of this time that we've been rotating around 12 has been basically sitting in a liquidity hole, right? And that might go on for another 10 to 20 minutes. So the thing I was looking for was a sell meta order to come in the other way and pushing. I don't think that we saw that. I think that you would have seen that before now. I mean, that was a little bit better there at 10.5, but you're still not getting a very good offer when they tick down. You're getting 1,400 absorbed on the offer. That's different. Need to stand up and stretch. Never did that. Okay. Oh, of course, 2 ticks up. What a shit show. Oh my gosh, guys. I should be an E-mini trader, man. We could be up 10 points. Bloomberg says today is judgment day for TikTok. You think Congress will actually like straight up ban it? I always assumed that it would be like they would get close to banning it and then they would actually do the sell like they were talking about when it was Trump, right? One of the funny things is that TikTok, I'm telling you what, the Chinese, they can manipulate that algorithm 100%. You go on TikTok and you get all of these videos about how they're banning TikTok, like they're trying to get you all upset about it. We're stuck in yesterday's last 30-minute closing range. But you find this a little odd, don't you? Am I the only one that did not expect this to turn into like a swamp? Because you're right, it's stuck in a range, and it's a very, very slippery range with not a lot of liquidity in it. There have been some icebergs and stuff at points, but it's slippery. Yeah, crazy. We should have a big move out. Yeah. I mean, I thought that original down move was like, I think we could get an all day down day again. You know, to retrace what we had yesterday and whatnot. I guess I fell for it because I wrote it all the way back, right? Okay, this time there's iceberg offering at 10.5. So maybe now we'll finally break the bottom of this range. And we'll see if they have legs or not. No, they tick up. Come on. You're killing me here. There you go. One order at 09.5, please. Just to make the chart look pretty. There you go. Oh my gosh, I totally forgot about that. RNC Research tweets, resident of East Palestine, Ohio, says he fears a toxic train disaster is going to be something that terrorizes this town for quite a few years, if not forever. Totally forgot about that one. That sure moved outside of everybody's conscious awfully quick, didn't it? Nassim Taleb is talking about math that I don't understand on Twitter again. You need to prove why it must be log normal, since the log normal is the maximum entropy distribution for random variables with constrained variance and proportional mean. Simple mathematical necessity under max entropy, it's the opposite you need to prove. Okay. What you talking about? Wait, is there context here? Natural distribution of heart rates. Okay. Well, now there is big icebergs on both sides here. It ticks down 2000. That's not the most encouraging thing right there at 10. Well, that's a little better. That's a lot better. I don't know though. It's not really attracting the volume, is it? It's like nobody is willing to hit outside of the range now. I wonder, is the amount of volume that we've had here in the micros normal? I can't tell. It seems like maybe we do more than that, but well, there's a little bit of a breakdown, more like what we want. Let's see if we can get below that open this time, though, right? Because they defended the open before. So now when I look at the chart, not that it's like a huge amount, but like ever since that peak, it's just kind of been steady sell flow over in the 10-year and in the 5-year, I would say. So flattening, yeah, flattening. We'll see if the 30, falls through here. Looks like there is some absorption there just above the open.
Consideration amount at 2 billion euros.
Trump to appear on Hannity amid tensions. You know what? There's tensions with everybody in the Republican Party right now. I don't even want to think about it anymore. Do you ever go on other people's podcasts? I did one time. It's not something that people ask me. I mean, what? I'm not super popular, I guess. I honestly, in all honesty with you guys, I often wonder what I'm doing. Like, if this is not an effective use of my talents. Not that I'm saying like I shouldn't trade,
could be reached or exceeded,
but I'm saying Seth probably is not the best equipped to be an entertaining streamer, I guess sometimes we have interesting, but like today, I've got nothing for you. This market is just so frustrating, and I'm stuck watching it, stuck in the middle of it. That was a good test of the seller's cost basis, but they're not breaking through. They're bouncing back up again. Now, I would be really cautious about who I would go on, but I would be willing. I did that for, I don't even remember the guy's name anymore, but we did that for one and it was really fun. And we've had people. So we had Gary Norden, and I did an interview for him. People really like that. I probably should do that more. Basically, other people are more interesting, so I just interview them and ask the right questions. That's probably
100.
That's probably a better setup.
Fear and greed index 57 out of 100, signaling greed.
Okay, well, on that move, that's funny, just as I'm saying, like, well, it does kind of look like flattening and everything. As soon as I say that, like, look at this steepener come back in on the 5-year, man. You're gonna start one? Well, best of luck to you. For a while, it seemed like there wasn't, like there was a hole there, but I feel like it got filled really quickly. Because the Chat with Traders podcast, they stopped doing it, right? Ah, you know what, Uzi? You were supposed to remind me to turn on that algorithm. Not that I would have taken any trades, but... Oh, this is pissing me off. This is what's happening to me this morning is exactly what you don't want to get trapped in. Now they're like, okay, couldn't break out the bottom side. Let's try the top side. 1700 absorbed at 12.5.
At 10:30 a.m. Eastern Time, we get the EIA natural gas change prior minus 58 billion.
watch it slip back just as quickly because that's what it's been doing. Enabled. But what do you mean with the new NT multi-brokers back? Or you're not just talking, because there is like a multi-broker thing that you can pay for, but that just gives you like interactive brokers and stuff. Wouldn't allow you to like trade with Edge, Clear, or AMP. Or at least that's my understanding. Crypto fugitive Duquana reportedly arrested in Montenegro.
Devices and the wider parliamentary network.
Yeah, interactive brokers and TD. Yeah. Oh, I want the old days where you as long as you could trade with anybody that had Rhythmic or CQG data. And without that, I'm kind of like a lot less interested in using NinjaTrader. Now, what it means is that I just don't move over to NinjaTrader 8.1, and they're gonna have to do something super effing amazing to make me move. But it was the NTFCM. Well, no, NinjaTrader FCM was something that only happened like last year. But NinjaTrader brokerage, yeah. Like when they created the brokerage and they moved everything over to basically, unless you have a grandfathered license, you have to use NinjaTrader brokerage. I'm not the biggest fan, let's say.
At 10:30 a.m. Eastern Time, we get the EIA natural.
So here's one of the things I was thinking about the other day that like really frustrates me. So it would be nice to create my own platform, right? And so I've talked a lot about like, well, like what if we did it in Rust? I think that doing charts in Rust would be interesting. Okay, here's the problem. in order to do what I'm doing here, where I have our Trader Pro forward the data to both Jigsaw and NinjaTrader, those applications have to be written on C#. They have to be a part of the .NET framework. So in order to get access to that memory, so I wouldn't be able to do that with Rust. If I was using Rust, I would have to connect to Rhythmic directly, and I would have to have everything going through my platform, which would mean that I would have to write my own DOM and all of that other stuff, right? So it would be a huge project. It would be a huge undertaking. Yeah, you would need investors. You would need investors, and you would probably need a couple of dedicated developers, like people that are interested in Rust and are interested in writing the trading platform and are willing to take the risk on finding an investor and going and making it. Like, I don't think that it could just be, oh, Seth wants to do it, and then he goes and hires the people, and he goes and finds people that do Rust but aren't really that interested in trading. I don't know if that would work. Okay, well, after chilling there around 13 for a little bit, they are settling back to 12 at least. Yeah, I would do the developing, yeah. But I don't think that I would do it all by myself. I think that would be too much to do it all by myself. You'd probably want at least 3 people. Like one of the problems that I foresee coming up with that sort of a thing is that you find out there's all of this infrastructure that you have to make too. Like, it's not just about making the application, it's about making the infrastructure for you to deliver the thing and to test the thing and all that sort of stuff. Do the licensing right. So you would need more than one person to really make it a viable business, I think. I mean, clearly there's a way to make the business work, because there's a lot of trading platforms out there, right? Please put a good watch list in it. Yeah, Jigsaw needs to get a watch list, don't they? Man, they came down there and they came right back up to 13 so quick. All the yokes just couldn't digest the fact that the Fed increased rates, even though banks and funds expected to pause after the bank runs. Yeah, I don't know, man. Somebody came in and bought it today. We're well past the second leg sort of a thing. Okay, somebody bought it today, bought it up, and then the market's just been shit since. And I'm kind of wigging out that they're complacent with just sitting here with rates at 3.47, and they're gonna raise the federal funds rate to 5.25. Come on. Where's the buy-in coming from? Seems to me like somebody bought and they're kind of market making it to try and coax it higher. I'm getting fucked here so bad now, guys. Did you notice the volume at 8:30? No, I'm done. I'm at my limit, guys.
Seconds.
I don't think that trade was worth the risk that I put on it, man. I should have been just the other way. Well, I don't think that I could justify being on the other way. I just don't fundamentally believe in it.
As expected.
Now it's the volume at 8:30. So you must be talking about well, it's 8:30 right now, my time. So you must be talking an hour ago. No, I don't know what you're talking about. Or maybe 8:30 Eastern time, so maybe it's 6:30. Well, there was that huge sell at the beginning of the session. Who knows what that was all about, man? It's not going that way. They're doing bid flight to safety.
Russia's Novak says
Like-
oil output.
It's kind of, isn't it a little, I don't know, man. It doesn't make sense to me. It doesn't make sense to me. I'm dead wrong. Pretty frustrated. Kind of unsure why I ever took another 2 trades. So I think that I'm just tilted. I think that some hedge fund has this bet that things are going to be bad when they're not. Stay out is my policy of venture. Yeah, I didn't really feel. Well, I guess the thing was the points at which I got in, I was starting to feel really good about the flows being aggressive in that direction. So yeah. Like, that's how I ended up with that thing, is like I saw somebody else to pick off, and so I'm like, oh, I'll take them off.
We have posted the weekly EI.
And then it didn't run. And then I'm just stuck in this thing for like a fucking, how long was it? Like an hour. 46 minutes. The longest 46 minutes of my life. God. Oh, it's just so dismal. It's not very good. $100 loss. $100 loss today. That shouldn't have happened. Well, I don't think when I say that shouldn't have happened, I mean, I'm trying to add on a little bit of risk to make things work, and it didn't work out. So, serves me right. And it looks like some people are getting squeezed at 16 now. At the highs.
ECB's Visco says euro area inflation expectations are substantially anchored.
That was where you
ECB's Visco says the risk of a
funny,
weak
isn't it?
price spiral so far is contained.
This move right here to the highs is definitely a squeeze. Like this is, I think that all of the speculators are with me. I think I'm not the only one that's like, this should be short. And so they're doing it short, and the market makers aren't playing along. And then because of that, when they come up to the high, everybody's puking, right? That's what it is. That's what I think is going on, at least. And what does that mean? That means that the situation that we had was not a strong enough situation to get the flow that we wanted. So I think we can understand why it didn't work out for us and everything.
Visco says monetary.
I don't think I can understand why I did it the way that I did, but I'm done trying to sort those things out. It happened. Fires at 12. So the thing is, I guess the thing that I'm trying to say is like this first leg that went from the lows up and bought, that looked like a meta order to me. This move
ECB's viscose has
looks more like a stop run.
Aggregates could limit consumption.
They turned down first. They broke the downside. They weren't willing to push it and immediately rocketed back up. When that happened, I probably should have been a little bit more concerned about it, trying to scratch it. Because I could have scratched it. They gave me a chance to scratch it before they shot it up here. But it's that original meta order buy that I'm still like, doesn't make sense. That makes sense. And I think the worst part about it was how boring of a range that was. Oh, gosh, guys.
ECB's viscose has a cautious approach, should guide money.
Shit like that makes me want to just be like, all right, I'm done. Done with this market. We're a Diablo 4 stream now. Chinese startup invents long distance kissing machine. I trade on the micro treasuries because that's the appropriate amount of risk. I'm not looking to really take on serious risks. That was the thing. Remember, we were kind of talking about this at the same time yesterday, and we didn't really have enough time to do it. But it seems to me that people with significantly less edge have periods, at least, of significantly more success than me, merely because of they'll go and they'll do the degenerate stuff, right? And I don't like doing that. And not only that, but I think that when the stress comes on, that it kind of triggers a freeze response in me, which really works against me, because basically I'm all hot, and no, that's not the way that I take it. Like when I'm winning, it's like I'm on the ball and I see the spot and I get out and I get pretty good exits. But when I'm losing, my exits are so terrible, and that's a pretty consistent thing. And so I'm starting to wonder if I just really don't have the risk tolerance to do what I'm trying to do. That seems to be a consistent problem that we've been dealing with for a long time now, and it's not getting better. Have you observed? Well, I have never gotten my hands on the MBO data to say. I have a theory about it. Would like to run my own study, but MBO lags during high volume? I did not know that. Well, I'm not the only one. So John Grady tweets, this morning's stock index action is price manipulation at its finest. Market makers have complete control. They get away with it on days when there is little danger of them being run over by other large institutions. Spike it one day, cover, spike it the other day. Yeah. You're using Denali. Oh, it's more than that, Khulud. Okay, so I want to talk about why I'm frustrated. We talk about market by order data. Okay, so when I have a DOM up here, okay, what's actually going on? Well, I can create a dictionary or an array of some sort that says this cell is 13, this cell is 12.5, this one is 12, this is 115, and this is how many orders there are at each one of those spots. Stopping by to apologize or critique of your trade yesterday? I don't know. You should have come in and critiqued my trade today because I did awful. Terrible, terrible day. I don't think, when something like that happens, you want to do something about it, and I don't think that there's anything to do. I think that obviously I shouldn't have taken on the amount of risk that I did, but I still like the trade. Like all honesty, I still want to come in and go short here. I still want to come in and just put a lot at 3.475 and just try and hold it. Right? Okay, so anyways, you've got this dictionary, okay? And when you're using regular data, regular level 2 data, what happens is it says, okay, now there's 146, now there's 200, now there's 80, now there's, right? And it's just constantly updating. And every time that one of these levels change, you've got an update that says it's now 435, okay? When you're doing market by order data, instead what you get is there was an order at 13 that canceled, there was an order at 13 that added, etc., etc. And so what was before one data point it ends up being like hundreds of data points, right? And you have to reconstruct it, essentially, right? So now they said this order at 13, it was 230, now it's 200. So what you have to do is at 115.13, instead of having just a number that is the total number of lots, you have to have a collection in there of all of the orders that are in there. You go into the collection and modify that one specific order to say it's now this or that, right? And then that's how you can determine where in the queue things are, right? So what did you just do? You basically doubled the amount of memory usage that you have to have, right? You've basically doubled the amount of computational processing, and you've exponentially increased the amount of data that's going over the wire, right? So while you may have never experienced a problem with using Sierra charts during like some of the crazy stuff like COVID and things like that, you just have to understand that the market by order data is significantly more computationally expensive. And so there is absolutely going to be a point at some point where you're going to run into a market where the market by order data is slower compared to your regular data. It's guaranteed to happen at some point in your lifetime. Just realize that. ZB has been a constant downtrend since the EU open. The ZB never really did get back to the highs despite all these other ones, did they? Oh, it's not $15 more, it's $70 more. I know, even this break of the highs is looking a little bit like a trap. I don't understand. So John Grady a few minutes ago was saying, like, this is manipulation. Spike it one way cover, spike it the other way cover. They get away with it on days when there's a little danger of them being run over by other large institutions. So what I don't understand is why there are not other large institutions doing something working in this market. the day after Federal Reserve meeting. Very bizarre to me. Yeah, I have that that chart on here. It is right here. I guess there's a correlation on here too. I think that what it has to happen is there has to be an imbalance, and the order flow and the price have to be correlated with each other. No, so for me, it's like $35 a month for rhythmic data, and like all of the fees and everything with the CME bundle. And if you want rhythmic, if you want Pro, which would give me access to either market by order or the API, it's like 100 plus on top of that. So then it's like 135. Oh yeah, I don't know if I have. I'm looking back at this and I'm like, this is not what I remember it was. And it wasn't what I told you yesterday, is it? Okay, do have a cumulative delta 2. Oh. This is not the auto-correlated flow. Hold on. Look, they shot back up there real easy. I think the strategy that I thought I was thinking about, I don't have it. Maybe I confused myself and I thought it was something that it wasn't. So I think what we do here is we do, or I'm gonna minimize all of these and I'm gonna say new strategy. I'm gonna flow it, flow R2, generate.
So 10 minutes away now, we get the Eurozone consumer confidence flash forecast -18.2 on a prior of -19. Kansas City Fed composite index forecast -1.5 on a prior of 0. and the Kansas City Fed manufacturing saw a prior of -9. As well, we expect comments from Bank of England's man. So Bank of England's man appears as a panelist at the Peterson Institute for International Economics Conference on floating exchange rates.
Yeah, that's what I think it's doing. Correlation, I'm using imbalance, market order imbalance. So basically what it's doing is it's saying if there's a market order imbalance and the price moved down together, then, and the imbalance is a certain amount, then it will take a trade. But what we want is get set R2 of 0 is greater than R2 threshold. Can try it both ways. It's the imbalance. What do you mean by dynamic or static? It's an indicator. Still got 7 minutes left here. R2 threshold. I feel like I'm missing something. I'll just try compiling it. Probably not gonna finish. Well, we can do a small back test. Well, it compiled. Yeah, the imbalance is basically just saying like how many more buys were there than sells in the period.
So just seeing Kansas City come out early here. So 0 is 0. It's lower than the forecast of higher than the forecast of -2. Apologies there. So it's 0, higher than the forecast of -2.
Tick replay. Just the first 3 months.
So 5 minutes away now to get the Eurozone consumer confidence flash. The forecast of -18.2 on a prior of -19.
What do you guys think about this upside in the treasuries? Think it's justified?
So as well, we're expecting the Kansas City Fed manufacturing. We did see the release of the Kansas City Fed composite earlier at 0. And as well, we're expecting comments from Bank of England's man. We have posted the video to Bank of England's man on the newsfeed for those of you that are interested.
John Grady says it's obvious to anyone who's worked in the industry there can be a grind in one direction as is happening now, but it's very calculated. This is why you see all the slow back and forth movement. Yeah, I really thought that it was going to break, you know? Well, I guess it is breaking to the high, but I've never seen it like this after a Fed meeting. That's where I'm off. Is I thought that the market would have many reasons to be repricing bonds today, and especially with the S&P 500 at 40.30 now. That just doesn't make sense to me. So whatever, I guess. Oh, I know it's everyone. They're frustrating. I think the thing that's frustrating to me, because I know it's frustrating to you guys too, when it's like we go through a period where we don't take a whole lot of trades. So like I go through a period I don't take a lot of trades, and then I come in on this day and I decide to take some trades and I get a huge bad losing day, right? Well, that did not work very well. And that took 48 trades. Okay, so I'm gonna try something else here first. I am wondering if using the imbalance and all of that sort of a thing is kind of not important. Because I'm worried that if by the time you start to get an imbalance, it's enough for my algorithm to like see anything about it, that like you're too late to the move already anyways.
Manufacturing index coming out at 3.
So I'd like to just take that out. My guess is that we are about to see news that the Fed's balance sheet has expanded to $9 trillion as the demand for the BTFP program is tapped. I don't know, man. Could be something crazy. Anyways, the thing that frustrates me is I'm getting bored. That's what frustrates me.
So we have put out the Eurozone Consumer Confidence Flash March 2023 full report on the newsfeed for those of you that are interested.
Well, I mean, if you bought the S&P 500, you should be green. So I would hope that you E-mini traders are doing well. But like, look, I've taken losses and I've taken much worse losses and much more stupid losses before. But what bothers me about it is that I'm bored and I'm like, why am I doing this? I'm no longer, I'm starting to feel like I'm not being productive. Well, that one wasn't much better, was it?
$42 billion in 2-year notes.
Well, that one was
US Treasuries
worse.
say they got to auction $48 billion in 6-month bills. So the US to sell $22 billion of reopened 2-year floating rate notes on March 29th to settle on March 31st. And the US to sell $43 billion of 5-year notes on March 28th to settle on March 31st.
Oh, I know I don't bullshit. Yeah. No, you know what I mean? Like, I've made really great videos. I think that we've created a very, very strong set of guidelines for you to base your trading off of and all of that sort of thing, right? It's still going to be really hard to trade.
Treasury says they will conduct a small value buyback operation.
And you're going to need to be willing to take on risk, and you're going to take losers sometimes.
2023.
And I don't know if I have the risk tolerance for it. And so, like, when I come in here and trade, the thing that I get out of the trading is talking with you guys. But, you know, like, the stream's not really growing. It's kind of slow. And the reality is that I'm probably not the best suited for that sort of a thing. You can see many people have been much more successful with it, right? In terms of, like, attracting an audience, even people that are, like, terrible traders. So, like, you know, basically we're keeping this going for the friendship at this point, because of how I felt. And the issue is just that it's like 2 hours in the morning for me, and there's all these other things that I want to do. And I can get the friendship part out, like, you guys can come into Discord, right? Like, you could come into Discord, and then you'd be able to, like, actually speak with me, and we could program and we could do stuff privately that wouldn't be on the stream, you know? There's not many on your level out there, new viewer. Thank you very much, Alexander. There's definitely not. I don't think that anything compares to the education that we have on this website. Absolutely. Or on this channel. Absolutely. Absolutely. I don't feel like that we got very much from this stream today. That's all. and the problem, it's really a selfish thing for me to say all this. Like that's why I'm like feel really uncomfortable about talking about it with you. Because I know that a lot of it is just that I'm ADHD and I'm always going to get bored of things. And then something's going to happen tomorrow that just makes me intensely interested in the market. And I'd just be, you know, completely all in on it again. All right. Well, we'll see what happens tomorrow. I will see you guys then. In the meantime, stay excellent, team.